Good morning, everyone, and welcome to this live trading webinar. I hope everyone is doing well. And Roland said, good morning, all. Good morning, Roland. William said, good morning, Theo and everyone. Hope all had a nice weekend. Good morning, Williams. Hope you had a nice weekend too. Larry, good morning, Theo. Good morning, Larry. Ruben, you finally made it from the Zoom, right? So let me know if everything works well for you. Said good morning, Theo. Good morning, Ruben. Mladen, how are you doing? Happy start of the week, Theo and everyone. Likewise, Mladen. Pribasti said hi and welcome to our webinar. I think first time you join us or first time you write on the chat. So thanks for your support. Mogil, how are you doing, my friends? It's been Maria Julia said, good morning to all successful vacationing in a way traders. Good morning, Maria. Akia said, good morning, Theo. Good morning, Akia. Nick, how are you doing? Good morning from Nick. Janice said, good morning, everyone. Good morning, Janice. Jenny said, good morning, everyone. Good morning, Jenny. Thanks for joining us, Mr. Cherry. It's nice to see you here. I hope you're doing well. Marcelinus said, good morning. Good morning, Marcelinus. So this content is for general information only and is not intended to provide trading or investment advice or personal recommendations. I uploaded the podcast just a while ago. Please make sure you download it and listen to that from your devices or any application you're using. And of course, if you are new here and you haven't downloaded the mobile application, please make sure you do that. So today, the markets, to be honest, we don't anticipate to have sudden moves in the market. Just give me 1 second to readjust a little bit. Risk warning here. We expected a low volatility week due to, in terms of major news events, not so many this week, and it's the third week of August. There are minimal news events, and when you listen to the podcast, you will understand more. Now, as usual, the pound US dollars, and actually just for your reference, today and tomorrow, no major news events as per our calendar. And on Wednesday, we're gonna be focusing on the retail sales in New Zealand. And we'll see if the Kiwi will still selling off. So for now, pound against the US dollar. On the daily chart, price is moving sideways, although a kind of accumulation is expected based on the indicator. If we check the weekly chart, you can see moving averages are still the slow below the fast moving average. So blue is above the red, and that indicates bullishness. But again, understand that this is a very long-term bias, and if we trade based on the fluctuation of the price, then we can also trade against the trend. We can trade with the trend. It's time correlation and time frame analysis. So if you are a price action trader that looks on the weekly overall picture and try to find some clusters and trade on the daily chart or on the 4-hour chart, on the weekly chart, 2 weeks ago, it was an inside candle, false breakout last week, as we can see from this price action, and buyers took control. Now, so it's a bullish overall. We are bullish in this one in the long term, right? But if we go on the daily chart, there is no clarity of any trend or any recognized pattern. On the 4-hour, though, it's very messy, very choppy, and trying to find highs and lows or to understand the current market activity, it's a bit of a headache here. So not that much clarity on this one. Euro US dollar weekly chart, price approaches the support. Therefore, on the daily chart, price printed this doji candle, and someone maybe expected to see some bullishness, although a kind of accumulation like a round bottom here, you can see from this pattern, we may see this way of the price. And RSI, it's here it's at 45 and it's approaching the 50. RSI, when it's below 50, it's considered as bearish. When it's above 50, it's considered as bullish. Now, because we identified the bullish divergence as well, or positive divergence on the 4-hour chart, as you guys can see, and RSI, it's almost at 50, we can take some bullish bias. But for me, this is not enough. If I understand, and here is what you guys maybe need to think about it a bit more carefully. Many of the traders are really rushing to do the analysis. You pay attention to the weekly chart. Let's say you are trading on the 4-hour chart or the daily chart. You pay too much attention on the weekly chart. You understand what's happening on the weekly, and then you go to the daily chart or 4-hour chart, and you don't have the patience to do focused analysis. And that caused a big problem, because at this point here, we identified that we want to buy, but where are we actually buying? Remember, we are trading CFDs product. We are trading, we speculate on the price move, and we don't hold positions for months and weeks. We want to get in and out, let's say within a few days or maximum few weeks or few hours. All right, so we need to be specific. We identify the tradable opportunity, but we need now the entry. After we find the entry, we need to check also the reward to risk ratio. So we have to put some effort in order to have a comprehensive understanding and 100% understanding of what we are actually doing in the market. Okay, so if someone wants to buy here, for example, and put a stop loss on 100 pips to be safe that if price it's going to come down and stay in the trade, and then needs to make 200 pips or 300 pips to go for a 3-to-1, and maybe it's going to take 5 days, that you can do that. So as long as you are consistent, and like I always say, that consistency cannot be inconsistent. We do something and we do it with consistency. One day we do A and another day we do B in trading. It just causes major trading errors down the track. All right, let's move on. Weekly chart on the Australian dollar against the US dollar. This currency pair offers clarity. What do I mean? Price made a well-defined lower low. Moving averages, they show they are bearish. Price makes lower highs and lower lows, and that's also bearish. And on the weekly chart, we have a long-term bias of selling. Then daily chart. If you guys, by the way, if you need to use some indicators on the daily charts or on the time frame you are executing, please let me know which indicators. Just type on the chat boxes. I would like to see which indicators you like to use, and I will pick up the indicators most of you are using, and I will apply them on the daily chart in order to give you also a bias on your indicators. We have lots and lots of people commenting here. Billy said, good morning to everyone. Good morning, Billy, and welcome to our webinars. I think it's the first time you're typing here, and thank you for your support. Zarabayat, how are you doing, my friend? Good morning. Fuad, how are you doing, Fuad? Good morning from Fuad. Khalid, good morning. I'm from India. Thank you so much for joining us, and welcome to the webinars. Piet said, good morning. Good luck trading this week. Absolutely, Piet. Looking forward to. Henry, how are you doing, my friend? My weekend was very well. I hope yours was well too. Rumen, hello, Rumen. Henry commented, Theo, generally is GBP USD a downtrend or an uptrend? That was a very good question, Henry. In which time frame are you referring? In weekly chart, it's in an uptrend. On the daily chart, it's in a sideways. Okay, and it's very, very important to guys understand, develop the understanding, and pay attention to the time frames and separate. We are referring, let's say this is the daily chart. On the daily chart, this is a downtrend. I believe everyone agrees that Australian dollar, US dollar, it's in a downtrend on the daily chart. On the 5-minute chart, it's in a sideways, it's in a ranging move. Do you guys see that? Price starts from here and it's moving within this range. So 5-minute chart is ranging. Daily chart, it's trading to the downside. Danny said, good morning, guys. Rumen is using the 9-moving average. William said, good explanation, Theo. Those are some of the negative experiences I had in the past together with not be patient enough. Yes, William, and I'm sure there are most of the traders, they go through that. X-Man said, hello. Hello, X-Man. Ruben said, I used the 25 and the 200 moving averages with the MACD on the daily chart. Okay. Sirje said the moving average, the 20 and the 50. Okay. So we have the 9 moving average, the 50, the 20, the 25, and the 200. I will apply some of them from next time because this is MetaTrader and it takes some effort to apply all these moving averages on the charts. Okay, Zarabayat uses Bollinger Bands plus RSI. Okay, I also use the Bollinger Bands. New Zealand US dollar price is still making lower highs and lower lows. We do expect it some selling off to be continued on the Kiwi against the dollar, and I'm not going to be surprised for some retracement, some price correction before it continues to the downside. USD JPY, guys, this is a textbook example. We've commented from weeks ago that as price made a new high, we were looking for a new high correction to start looking for longs. So this one here, it's a good example of time frame correlation. Like there are two different ways. Actually, let's focus on the major one. How do we apply time frame correlation? Time frame correlation applies when we identify the clear pattern on a higher time frame, like in this occasion, the daily chart, and we want to trade, listen to that, we want to trade the daily chart using a lower time frame, like the 4-hour chart or the hourly chart. So how can we do that? We wait for price we do analysis on the higher time frame. We do not do analysis on the lower time frame. On the higher time frame, we identified where exactly we want to place, we want to buy, we have interested in buying. For example, here, let's say we have interested in buying this because of the higher time frame analysis. If we check the 4-hour chart or the 1-hour chart, we want to find the way to enter the market. For me, bullish engulfing as a buyer on the 4-hour chart is my catalyst. But if I want, I can go even to the hourly chart and find a strong price action pattern like the bullish engulfing or even a hammer, because we expected that buying pressure will appear on this level based on the daily chart analysis. But always, guys, the lower time frames, always, they gonna, on the way down, they gonna develop a downtrend. And don't be scared to buy against the downtrend of this hourly chart. Why? Because you are buying exactly where the majority will buy on the daily chart, and that's the best way to attack the markets when trading, and when you have a trend on the daily chart, or if you have a trend on the weekly chart, you can find a nice 4-hour candle or a way to enter on the lower time frames. Okay, but where really the problem is, and where traders, they messed it up, once they identified, let's say, a reversal, forget this one, you identify the reversal price action on the daily chart, and you are not patient enough to wait for price to touch on a specific price level, and you go to the lower time frame, and here you're trying to find buying opportunities. No, we have to wait for the price to tap into the higher time frame level. And then if we use and it's a logical reason behind this. Why should we wait the price to tap into the area? Because it's gonna activate it. All the orders are sitting there. They're gonna get activated, and if there are many orders sitting there waiting to be executed to the buying to the upside, what does it mean? On the lower time frames, we will see price action that they support the buying pressure in the market. That's the only reason. Also, on the lower time frame we go, the more patterns we'll identify. Like this one, it's an inverse head and shoulder pattern. A break above this neckline, it will totally give a strong bullish activity. So that's one of the reasons I encourage traders to use a handful of markets and pay attention to your analysis. That's the way you're gonna develop your skills in trading. If you monitor 50 markets or 45 currency pairs like you can find on the MetaTrader, then and you try to flip from the weekly to the daily to a lower time frame, it's gonna be a little bit of frustration. But if you want to use all the currency pairs available, I encourage you to do your analysis on the weekly and execute on the daily. Don't look at lower time frames. But if you want to look at lower time frames, you just if you want to do what I show you here, focus on the majors and focus on the Japanese yen, or just on the majors. You have about 10 markets to watch. Okay. Next one, USD against the Canadian dollar in a steep uptrend. It's been 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 3 weeks in a row with no even a retracement, a correction on the daily chart. So it's very predictable market, this one, that at some point it's gonna retrace. Remember, guys, we are trading currencies. We don't trade the oh my God, the stock market. And as I always say on my trading coaching sessions, and I had, like recently, I was discussing with my good friend Bran on the weekend, that currencies, they have cyclicity. They go on cycles, deep and deep and deep. Okay, so please understand this, and there is a whole of a different story how to trade currencies. In these webinars, I explain you all the time, but really at some point you have to start applying them in a way we explain them here. And don't try to find, you can go in any YouTube channels, in everywhere, and learn and read and try to learn as much as you want. But trust me, here I explain you how really the currencies work. And yeah, I don't have the privilege of time to go more in details, but try to pay attention to what we do here. Still overall bullish bias, but we do expect some correction along the way. USD CHF, this is the 61.8 fib retracement, and we do expect it now to see a reversal candlestick, or if the market is going to break to the upside, then we're going to target the next areas of resistance, which they are up here. But because the weekly chart, it's on a very defined and structured downtrend, lower highs and lower lows, price touches the 10 moving average. That's the equivalent to the 50-day moving average. That's the weekly chart. So that's the 10 weekly moving average. On the daily chart, as I told you, you're going to see higher highs and higher lows along the way, but you are trading in a strong area of resistance of the weekly chart. So strong price action reversal can lead us to more sell-offs. On the 4-hour chart, some double bottom, some bearish engulfing. So far, we didn't have any strong price action allow us to take a trade. We're gonna still be waiting. Nothing so far. We talked a little bit more about markets today, but I think that was really worth it for everybody here. Guys, sorry I didn't read all your questions. Rumen Henry, I like using 2150 on the 4-hour and daily chart. All right. By the way, now I read your comments, and thank you for having the courage and type what you do, because that really gives me a good understanding of what you are lacking in trading. And when you are saying that you are using this moving average in this time frame and in the other one, because maybe nobody so far explained you really how to read them on these time frames and how to utilize them by having a moving average on the daily chart, on the 4-hour chart, but without really understanding and knowing why you have them and trust them when you are trading, it's not going to help you. It just creates more frustration. I'm not saying take them out. I'm also a fan of moving averages. I use them, but I would like to teach you how to really use them on each time frame and what's the purpose of each moving average. So the 50 moving average, the 200, the 20, the 9, all of them, they have a specific purpose on the daily chart, not on the lower time frames. But there are markets respect them well, and we're gonna I'm gonna try to give you as much as I can during the live trading sessions, okay? Because it's just for 30 minutes length, and unfortunately I cannot tell you everything I know in 12 years in 30 minutes, okay? Palmier, good morning. Here, when I said it's like a textbook example, I mean it's like everything we see on the internet, like higher highs, higher lows, and we buy the dip in an uptrend. Henry, where do I choose my target based on daily or 4-hour chart? If you are trading on the daily, on a time frame correlation based on the daily move, and you execute on the 4-hour chart, you can feel confident to target the daily most recent high if you are buying, as per the example we analyze on the USD JPY. And room and comment, stop loss, it's closer, is more favorable, absolutely. Rioi said, thanks, Admiral, you are very welcome. Yes, scalping time, 3 minutes to London Open, Theo, thanks for reminding. So DAX. So 2 minutes for the London Open. And daily chart. Price last week tapped into the area of this support, and this is still valid. 4-hour chart consolidates here. There it's a nice box, nice ranging on the 4-hour chart. So I will go for a buy stop order above the previous high. And we have about 30 seconds for the London Open. And a sell stop. That also, I think that's the 4-hour box, yes. So we expect a breakout outside of these areas to be a strong breakout. Crabacity asked, please, sir, can you explain? You can call me Theo. My name is Theo. You don't need to use the word sir when you want to mention me. So can you explain something about Fibonacci? I can explain many things about Fibonacci, but in what extent, how to use them, have you ever used them? Do you have a specific question, please, about Fibonacci, or you need to know how to use them in general? I can do that tomorrow. Just let me know exactly what's your concern. Let's see which order will get triggered first. Roland said, I use stochastic, commodity channel index, and MACD. Okay. I'm trying to understand how you combine them in order to find the signals. MACD 12.26.9 by default, the 20 commodity channel index, and stochastic 23.3. Okay, a little bit slow stochastic there. Let's see if the breakout will occur to the upside. Gold. For reversal traders, this is a nice signal on the gold because maybe we're going to have a bullish engulfing. We can place a buy stop order with a stop loss below this low here to get the bullish engulfing, because the market at some point will correct before it continues to the downside. WTI, let's see if this is going to develop as a head and shoulder pattern. So far, buyers are not that strong. Compare these candlesticks with these candlesticks here, but we will see. Back to the DAX. Basti said, yes, how to use Fibonacci and EMA together to know exactly when to enter the market and exit the market. Okay. We will explain first Fibonacci, and then we're going to explain also the moving averages. Let's see if a break to the upside will occur. 2 minutes after the London Open. And if price action remains as it is, then a bullish engulfing will be printed on the charts. And if the next candle will be very promising. So the buy order got triggered. I'm looking for 10 points here. Looking to target this area of resistance for this copy. Let's see if the price will follow through. Rumen said use the sweet point. Okay. Why am I looking on the side? Okay, the reason someone asked why am I looking on the side, because I have another monitor here and I monitor the price with the Bollinger Bands and the and the RSI with stochastic as well. That's why I look on that side, because when the price closes above, now it's breaking above the Bollinger Bands, there is a high chance, guys, take profit almost, get triggered. Let's see, winning trade, maybe not. Let's see if the price is going to make it up to the resistance. We are on the spread now. 5-minute candle closed as bullish, and the profit target got triggered, and that was very nice. I hope, guys, you enjoyed. If you're still in this trade, please understand that price is not gonna rally forever. A correction will follow at some point. Remember, try not to be greedy as much as possible, at least. And usually after these moves occur, we see a snap back to an area that where the price feels a bit comfortable to be. So, and that's what we call the mean. If you are using moving averages, you will see that price after few bullish candles has the tendency to go back for a bit of correction. So we bought here, We exited on the 10 points. Price now moves 25 points. If you are still in the trade, manage your risk accordingly. So that's all from me today. I hope you enjoyed the webinar. I hope you had a great time and a nice winning trade. I hope you learn a lot. Please make sure you give some thumbs up on the YouTube channel. And also for me, I would like you to like the videos if you find it some value, and that's all I'm asking you. Stay consistent, attend your webinars every day, guys. I'm here for you. I wish you all the best with your trading, and I look forward to see you tomorrow at the same